Aloha. This very short video will arm you with valuable information that is important and that you need to know so that you can make an informed decision about what kind and how much life insurance you want and should have. But in order for you to make a fully informed decision, you really should have a personal consultation with a qualified professional who can answer your questions and provide you with recommendations based on your specific requirements. I'm Stan Cox, Principal Broker and Strategist with SC Finance Strategies and Insurance Consultants. I'm also the author of the books on the tax-free cash growth warehouse strategy, and I'm the Managing Director of the Hawaii Financial Free Thinkers Academy, a nonprofit financial literacy education organization. The primary purpose of all life insurance is to provide a financial benefit to the beneficiaries of the insured person in the event of their death. So the first bit of info is the general idea, the general rule of thumb is that your life insurance should provide or replace 8 to 10 years of income for those who depend on you when you are no longer around to provide it. But there are three basic kinds of insurance, and they are vastly different from each other. The cheapest, and I use that word here intentionally, is term insurance. I say cheapest and not least costly because while the premium for the term may be less than for the other types, it's actually more costly relative to what you get. You see, term insurance is designed strictly for the death benefit and has no cash value. Nowadays, many term policies also have limited living benefits in the form of accelerated death benefit in the case of terminal illness. But for all practical purposes, term is strictly a death benefit insurance. That said, the actuarial requirements are such that only about 2% of all term policies ever pay out the death benefit. That's because they are designed to expire before the insured person dies without any benefit being paid. Then there's universal life insurance. And this is the most confusing and often the most costly of the three kinds of life insurance. You see, well, universal life, and that includes GUL or guaranteed universal, IUL or indexed universal, and VUL or variable universal, they're all sold as permanent and cash value insurance, but they're built on a term insurance chassis. As such, the cost of insurance increases with time, and there are several fees with the designs due to the various riders that are built into it, which are needed in order for it to build any cash value. Because of the steadily increasing fees, unless the owner of a universal policy overfunds it regularly, it's highly likely that the policy will eventually lapse without any benefit at all remaining. Finally, there is whole life insurance. Now, this truly is permanent and cash value life insurance. The premium is set at the start of the policy and is guaranteed not to increase. As long as the premiums are paid as agreed, the policy is guaranteed never to lapse or expire. In most cases, the death benefit is guaranteed never to decrease. And in many cases, it will actually increase without the premium increasing. Now, I know this is a lot to consume, and from this video alone, you really can't make a fully informed decision about what is the best life insurance for you. So I invite you to book a phone call with me, and I will answer your questions. And if you like, I will make recommendations for you. and I can provide you with a free, no obligation quote for a policy that will meet your needs. The link to my calendar where you can book a phone call is in the description box right below this video here, along with all my contact information. You see, we're here to help, and I look forward to helping you. Go ahead and book your free consultation, and I'll talk with you soon.